Chris Swift is with Swift Trading. And Chris, we finally got the numbers.
Yep.
I mean, for an entire week, there was a buildup to what will USDA do, and especially what will USDA do for corn. And then we get the numbers.
Yeah, and it came out pretty much in expectation. So we gained two bushels an acre on the corn. We lost about 750,000 acres due to the ponding and flooding earlier during the spring. Probably the most interesting is the beans, because we got a lot of beans. We have second crop beans, and we've got good rains coming in on those second crop beans. So I can see the movement lower in the bean market. In the corn, I'm a little bit friendly now because we have a lot of information in front of us. So we haven't been able to push corn down dramatically lower, even knowing this and seeing no changes out there pretty much from this last report. Kind of leads me to believe we're closer to finding a bottom in the corn than maybe we are the beans. And when I say a bottom, that doesn't necessarily mean it goes up, but we may have to wait until harvest to get some of that proof of how good those yields are, because we could always hit the combine in the field and see some areas that just didn't improve as much as what USDA may have thought.
So speaking of corn, let's look at the 6-month chart on corn, and again, really tells the tale leading up to where we are today.
Oh, absolutely. And if we look at those prices back 460 through 480 and the length of time that they stayed above there, you would think that farmers had plenty of time to make those marketing decisions. So those that did not are probably in the most interesting position, because there's not a great deal in the futures market they can do much anymore. So you may want to look at just making some cash sales and then re-owning it on the futures. And because we're not at full carry, that's the cheapest place there is to store corn right now.
I want to hit another one for us, and that's the wheat market. And just using Chicago as a good example, maybe some positive news for producers in the wheat market. But again, we're trading near some lows.
Yeah, and when you look at that price, $5.91, that's not a very cheap price for wheat, but it's not expensive anymore, and it kind of is plateaued down there at the lower end of it. And I don't really foresee much happening in wheat. We could get some overseas issues. We know Russia is always going to be in the news with the wheat markets there. Australia, a huge wheat producer there. They export a tremendous amount of their product. But here in the U.S., I don't really see a really bearish market nor bullish for wheat, either one.
Okay. Speaking of bearish or bullish, how about we look at livestock markets? Chris is teed up and ready to go. Come back and join us as Market Day Report continues after this. This is Market Day Report. Let's go to the cattle market. Live cattle futures here in morning trade moving higher. The August 184.15 up 82. October now $1.27 higher at 181.30. And how about the feeders? Well, they've been following along and up $1.37 on the September at 240.87. That's the most active contract. And wrapping out the proteins here, and August hogs 22 lower, 89.80, with October at 72.40. Down $1.92. Let's talk a little more on the cattle side with Chris Swift, Swift Trading. And I read something you wrote, I believe, either late yesterday or earlier this morning. Packers are in red, the feeders are in the red, and the question about backgrounders now. What are you watching?
Well, right now they have paid tremendous amounts of money for calves and stockers now that they'll background for the next 3 to 4 or 5 months. And we've lost all of the premium that we had in the futures board there. And then we traded an even basis for several weeks. And now we went into a massively positive basis. Well, when we saw both of them leap at the same time, we started to see the cash market soften a little bit, and the futures market leapt out in front. It dropped $20 in 3 days and just left the cash market sitting. Well, through that time, the cash market has now slowly crept a little bit lower, down a little over $16 now from its high, and in less than 47 cents basis when you look at the August contract there at 245.40, yesterday's index 245.47. So you've converged basis back again there, and that's going to be the story from this point forward, is converging the basis to the next contract month out. So we'll still have September, October, November to go through, and then when we look at it January is already trading at what would be a 10% discount of the index from the high. around 235.70. And what we really don't know is where is that finish line? Is it a 10% decline? Is it 15, 20%? Somewhere around in there. But if we go back and look at where the December of 23 low was, a 20% correction is right around that area there. So that would not surprise me a bit in the world to see us drift off that low.
Okay, so really we can see what's coming down the road. There will be no surprises there.
I don't
it's
think
just
so.
when it gets here.
Right. I think the futures have already painted a very clear picture of this is what we're going to do. And, you know, again, they went so far so fast that now it really created a quicksand, a swath of it, because now you have to traverse back and forth in that. When the basis is negative, I'm selling at a high every single time. When the basis is positive, there's nowhere in the future to sell it higher.